Ladies and gentlemen, in this video, I'm going to be doing something very important. I'm going to be comparing the current correction slash consolidation that we've been seeing since around March, and I'm going to compare it to previous corrections and consolidations that we've seen in prior bull markets around the same phase in the market cycle, and even in different phases, just to get a really good idea of how bull market corrections are meant to look and whether this one is different or not. Basically to kind of confirm whether there's anything to worry about here or not. I'm then going to look into the macro invalidation data, just to be very clear here at the start of the video so we don't get confusion in the comments. I'm macro bullish on Bitcoin and cryptocurrency, as you guys would know if you've watched any of my content. I think we're in a bull market. I think for all intensive purposes, the data right now is very clear. The data currently as it stands is suggesting we're going to be seeing an altcoin season quite soon. If not, it's started already, right? It really depends. And that will lead for, a bullish period of time. And I think Bitcoin's going to new all-time highs, all this stuff, right? The fact is I'm macro bullish. But the fact also is that this cycle has seen some preliminary deviations from regular market cycle theory. We've discussed that many times. The 4-year cycle is not as reliable in this cycle as it was in perhaps the prior cycle or even in the 2017 cycle, okay? So we do need to look out for any abnormalities that could form. And in this video, I'm going to be doing that. I'm going to be comparing this correction to prior corrections and just really investigating the possibility of any sort of bearishness here. And then also providing data as to why I don't necessarily think it's that concerning, even if there are the abnormalities. So I think the main point of concern that people are having right now, as I may have mentioned just then, is the length of time that Bitcoin has been going sideways. So Bitcoin obviously ran upwards here from the January bottom, which was triggered by ETF approvals. ETFs were approved over here. We saw a sell the news event, of course, as expected, went downwards. And then from January upwards, we saw a massive surge upwards in Bitcoin from 38,000 all the way to 74,000. I mean, really just a pump that we don't really see very often at all. That's a pump of, basically, let's just go ahead and measure it right here. That's a 91, 92% pump in a matter of a month and a half to 2 months, right? So just really superb price action on Bitcoin. Very, very rare to see price action that strong. But now it's almost like Bitcoin has ran out of steam here. That's what a lot of people are pointing at. And we've been going sideways, since we entered the range. Let's just say that the range, the bottom of the range, is currently sitting at around 61K. I know we had that little deviation below 57. That was a perfect deviation, but it was a deviation nevertheless. The range currently sits, for the most part, at around that 61K region. Since we entered that 61K region, we've been going sideways for the most part for about 91 days, which is 3 consecutive months. So it's not a short period of time. I can understand why people are getting a little bit concerned here. I'm going to compare it to prior cycles, but I want you to keep in mind that this time really is different for a lot of reasons that we'll discuss in a second here. But let's compare it to prior corrections. If we're looking at a similar correction in the 2020 bull market, we can see we were around the all-time high region right over here on the right-hand side of the screen, which is very comparable to what we're seeing now, right? Because we're seeing our consolidation slash correction around the prior 2021 all-time high region. So this is a very comparable piece of data. And you can see that Bitcoin, it did find turbulence around that all-time high region. But the turbulence lasted nowhere near as long as what we're seeing now, right? So, I mean, all in all, if we're counting from when it really started to slow down over here to when it really started breaching again, it was about a month, right? Just less than a month. We go back to 2017 or even 2016, right? Back even further. And we look, when Bitcoin found that kind of all-time high resistance zone. So, for example, the all-time high was over here. The resistance zone was vaguely over here. We saw a bit more turbulence this time, right? And what this kind of tells us, let's just measure the data first, right? Okay, so we were trending upwards. I mean, realistically, the correction only lasted, about 2 months, right? 50 days. But you can see the turbulence really started ramping up even from back here in January and extended right through to around April here. Now, that's quite comparable to what we're seeing now. Of course, the structure is different, but that turbulence was there for the most part. We were still maintaining an upwards trend, but it was a very turbulent upwards trend. And when we move upwards a little bit more, and we just see on the very next impulse above all-time highs, you can see that we had, again, a situation where we had very lengthy corrections. That's another 63-day correction. So, look, although this correction here has lasted quite a long period of time comparative to corrections at similar parts in prior market cycles, it's lasted about 30 days longer than anything that it's comparable to. That is perhaps something that you can be concerned about, but when you put it in context of the situation we've seen, I don't think it's concerning at all. I'm going to tell you why right now, okay? Again, we did not have, adjusted for diminishing returns, a run-up of 92% in a literal 50-day period in the prior cycle, right? So for example, we look at 2020, and we see a 52-day period from 2020, for example. Let's just see how long this took. That was 80 days, okay? So an 80-day period, and it was 100% run-up. In a 52-day period, we only saw a run-up around 35%. And this is when the price was 4 times lower than where the run-up stemmed from in our current cycle, okay? So an impulse around 60% of its strength, while the price was around 4 times lower. Okay, so diminishing returns wouldn't have taken much of an effect there. And then we go back to even in the 2016, 2017 cycle, back to a similar kind of comparative point. And we look at, for example, how quickly Bitcoin ran up in the similar kind of phase that we're at now, which is the all-time high phase. So we'll just measure from back here, for example, a 52-day period took us upwards 24%. And that's when the market cap of Bitcoin was absolutely minuscule and very small amounts of money would have moved Bitcoin upwards. So the point I'm trying to make here is this, right? Quite frankly, I think we saw Bitcoin massively over-exaggerate in upwards returns throughout the end of 2023 and the start of this year, and that is what's led to this sideways consolidation. We also had, again, these ETF narratives and the ETF reality, which are two very different things, by the way. The narrative of the ETF is really what fundamentally drove the price upwards. The reality of the ETF was, of course, positive, but it's the narrative that's stronger, right? People buy because of things. They don't buy the ETF. They buy because of the ETF, okay? A very small number of people, in comparison to how many people knew about the ETF, were actually buying the ETF. They were buying on exchanges with self-custody because of the ETF news. And so the ETF narrative and the ETF reality are very different things. But just looking at what's happened with the ETF volume right here on the screen, you can see very clearly the ETF volume has tapered off massively. We haven't seen significant ETF volume since the start of March. It's literally tapered off into a period of just quite low volume, realistically, in comparison to Bitcoin's overall volume. We're looking at 10% of the trading volume, which is a small buff. But if you're looking at the net inflows, we're seeing basically, virtually, 100 million on average of positive net inflows, which is really not much at all. It's not going to cause any dramatic upwards trend at all on Bitcoin price action. And we've even had days where we've seen $500 million going out of the ETFs. And throughout the entirety of basically April and even the start of this month here, we've seen, on average, net inflows actually be negative. So the ETFs right now are very clearly not really having an effect at all. And if they are, they're having a very minuscule effect. Whereas when they came out, again, in this in this January, February, March period, they were very clearly actually having a massive effect because they were at the forefront of people's minds. Okay, so people were buying because of the ETFs, and also since they were new, people were actually literally buying the ETFs, and that led to a massive kind of surge upwards in Bitcoin price. And this is why we saw Bitcoin moving up over here on the narrative and then on the reality over here. Now those narratives and realities have tapered off, and Bitcoin is back in kind of a position in which the narrative is, the regular cyclical narrative rather than external ETF narrative again. But the problem is we've kind of deviated from where we're meant to be cyclically. So if we look cyclically on a cyclical basis, we look at these yellow lines, for example. I'm going to explain this chart, then I'll bring it back to the point. Bear with me. We have yellow lines on the Bitcoin monthly chart, on the RSI, and on the price chart. Obviously, I've just made them yellow. They're not actually yellow, but they're very important resistance lines. And you can see the price chart lines here line up with the RSI line at 66 on the monthly chart RSI. So every time we've retested the price chart line, we've also retested the monthly chart line. This has been very true throughout the entirety of Bitcoin's price action. The fact of the matter is the monthly chart line here at 66 is connected to the price chart line. And what we generally see is a rejection from the price chart line and the RSI line, a pre-halving correction. The halving then occurs, and only after the halving do we break the yellow line in the price chart and breach all-time highs on Bitcoin, okay? That happened in the last 2 cycles, but this cycle, Bitcoin has actually moved about 200 days earlier than expected, okay? So Bitcoin broke all-time highs about 200 days earlier than expected, not only via this chart's metric of analysis, but also via a basic date range analysis. So we look at how long Bitcoin has historically taken to breach all-time highs. So we measure from the bull market all-time high to the breach of that all-time high. It's taken 1,100 days, okay? The exact same thing beyond the point of coincidence in 2020, 1,100 days. But this time, in this cycle, it's only taken literally about 850 days. Meaning, again, we're about 250 days, or we were about 250 days ahead of schedule on Bitcoin. So this is where we get the two kind of points I've spoken about in this video. Point number one, Bitcoin was massively inflated by the ETF narrative, which has now tapered off, okay? And so now Bitcoin has returned back to the cyclical narrative. And point number two, going on from that premise, is the cyclical narrative is kind of damaged in a certain way because Bitcoin has already moved way faster than it's meant to. And so this comes to my conclusion here. The consolidation we're seeing here, yes, it's extensive in comparison to prior bull markets in the same price region or in the same structural region, but it's almost necessary or expected purely because Bitcoin is, one, ahead of schedule by a long shot, and two, was overinflated very, very fast, very, very early. So it's very normal, in my opinion, for Bitcoin to see this long sideways consolidation. I don't think that within itself is a reason to be concerned, personally. Ladies and gentlemen, a brief interruption here for some promotions. We've got 3 exchanges that I advertise on this YouTube channel, all of which fitting different niches. Take your pick down below. With those links down below, you'll get access to either one of these exchanges with my referral link. And upon signing up with my referral link, you'll get access to a reward center with thousands of dollars in rewards exclusively with that link, as well as a 15% trading fee discount for life, again, exclusively with that link. Take your pick, all very good exchanges. Use the links down below to help the channel and yourself by getting on a good exchange. The VIP group on Telegram, we trade altcoins 4 to 5 times a week with a 77.51% consecutive win rate over the course of 18 months of trading. Fully transparent results there. Not ashamed of those results. Go check them out for yourself. That's why they're there. We've also got the group chat involved in that membership. You can get in that group chat and discuss the market with other VIP members. That within itself is incredibly useful as well. So check that out. And then finally, the Crypto Academy's Become a Trader 10-unit course. If you want to learn how to trade, this is your time to do it with that course because we have a bull market sale exclusively right now. Limited time, low price. Check it out. Guys, thanks for watching. Let's get back into it. I think fundamentally, if we're going to talk about when Bitcoin's bullish and when Bitcoin's bearish, we need to look at the macro zones, the relevant macro zones. What are the relevant macro zones? It's very, very clear, guys, okay? We have the bull market support band, okay? We have the bull market support band right here on the screen. Let's delete this yellow line. Again, this was the line that held up Bitcoin throughout the entirety of the 2017 bull market. We did not drop below it a single time over a 2-year period. Only when we dropped below it once over here, that's led to a bear market, okay? Exact same thing in 2020 for the most part, minus that little cyclical deviation over here. Exact same thing for the entire run-up. And once we got back above it, exact same thing again. And right now, for all intents and purposes, we could be seeing the very same thing, okay? We've held it since around the break upwards in October, which is the start of this massive impulse to the upside. We came down, we retested at 57K, and we touched it perfectly and bounced upwards, okay? It's not the only thing we retested at 57K. 57K is also where we saw a 13-year-long ascending support line on Bitcoin be retested in conjunction with that bull market support band and also in conjunction to the pi cycle center lines in yellow and green on the screen, which, just like the bull market support band, are very critical macro support zones. So I think when we're talking about whether Bitcoin is bearish or not, or whether Bitcoin's seeing danger or not, first of all, we have to give context to what's just happened. It's very normal, in my opinion, for Bitcoin to be seeing a more extensive correction, considering we had a much more extensive run-up, okay? Even adjusted for diminishing returns, a much more extensive run-up, and also a much earlier than anticipated run-up. So what we're seeing right now, in my opinion, is normal. I don't see this extensive sideways consolidation as unnatural, given the context. I don't. And I'm very primarily focused on the structural trends, I guess, right? What are the structural trends? Again, bull market support band, the 13-year ascending support line, pi cycle center lines. These are the things that matter a lot to me. Even on the total cryptocurrency market cap chart, the total 3, so this is the altcoin market cap chart minus Bitcoin and Ethereum, we see very clearly we've got a 5-step structure. We're copying exactly from the last cycle. Step 1 was bottoming out. Step 2 was the peak. Step 3 was our first consolidation in the bull market. Step 4 was our second consolidation in the bull market. And then breaching all-time highs was step 5. We're on step 4 right now. We're following the exact same pattern. And what we did on step 4 in the last cycle was we held that bull market support band for support, okay? Right now we're doing the same thing. We came down, retested it, held for support. You know, as long as we're above that line, that bull market support band, I'm not concerned here. It doesn't really matter, in my opinion, how long Bitcoin goes sideways here. As long as the structure is intact, nothing changes, okay? You only have validations of a breakdown when there is validations of a breakdown. There's no validation of a breakdown when you're ranging sideways. That's not bearish. That's very well could be bullish consolidation. So I just wanted to take a moment here in this video to kind of squash these emerging claims that Bitcoin is somehow doing something bearish by being slow here. I think it's a very natural result of what we've seen in the months that led up to us being in this price region. And I think we really need to stay focused on what actually matters, which are the structural levels, the critical macro support zones, not just how long Bitcoin's been going sideways, because that's context dependent. And with the context, it actually makes a lot of sense. So guys, thank you so much for watching. I hope you enjoyed the video and I'll catch you in the next one. Thank you.